Good afternoon, everybody. Thank you for joining us. Today we have an update with Mako Mining. CEO Akiba Leisman is with us today. The format of today's session will be an investor update followed by Q&A. So if you have questions, please put them into the comments box. I believe it's on the right-hand side of your screens. And as always, today's presentation will contain forward-looking statements. If you'd like to learn more about those, you can find them in the presentation on the company's website. And with that out of the way, welcome Akiba. It's good to see you.
All right, thanks, Magda. Good to see you as well.
All right, thank you.
All right, so I am going to try to go through this presentation pretty quickly so we can spend as much time as possible kind of going over some of the questions. So again, my name is Akiba Leisman. I'm the CEO of Mako Mining. This is actually only the second presentation I've made in the last 6 weeks. The one before this, gold also was at an all-time high. So today, I just noticed that we're at 2770. I should probably be doing these presentations more often for the benefit of the entire industry. But a little bit about us is that we are a producing gold mining company. We tend to focus on relatively small and intermediate scale operations in the Americas. The first mine that we got up and running is what you see on that picture on the cover slide over here, the San Albino Mine in Nicaragua. We took over this company back in 2019 and then built this mine from scratch with our operating team over the course of a 1.5 year period in the middle of one of the most challenging environments to go and build and operate mines during the pandemic. In fact, the pandemic hit when we were about 30% complete with construction. So it was a testament for our team to deliver that project more or less on time, more or less on budget, in one of the most challenging environments really in mining history. But that's not the only thing that we've done. So the early part of this year, we announced the acquisition of Gold Source Mines, which has a development stage project in Guyana, one of the hottest jurisdictions globally in the Guyana Shield. We acquired a 1.8 million ounce all category resource on a highly developable and scalable project. Gold Source, immediately prior to us announcing the acquisition, put out an updated preliminary economic assessment that was based on 1850 gold that showed a recovered gold profile of 1.1 million ounces, are an extremely profitable and high NPV project. Now, at 1850 gold, the NPV of that project was roughly US $300 million. And as I mentioned earlier, is that gold right now is at 2770. So it doesn't take a mathematician to see just how much the value of that project wound up increasing. And this is in a jurisdiction that, just like Nicaragua, is amenable to developing projects of this scale and this scope. And this really isn't the it for how we're going to be looking at the growth of our company. We tend to be astute M&A investors. I come from an investor background, even though my educational background is in engineering. But I spent most of my career on investing in mining companies. And I have to say, this is one of the strangest markets that's been at least available to me in my career, where you have the commodity performing as well as it is, the companies performing as well as they are, but stock price is really not reflecting the underlying fundamentals of the industry. So it really does present itself, I would say, as an opportunity that I really haven't seen throughout my career. So even though psychologically I'm always set and to be a bear market investor, I actually really like when things are distressed and being able to acquire assets on the cheap. But I have to say, this is really one of those environments that not only is the opportunity set bigger today than I've really ever experienced, but our ability to execute on acquisitions has also increased immeasurably, both since the acquisition of Gold Source was completed the early part of July, but also just the nature of the gold market right now. So we do think that things have really allowed us to take Mako to the next step, being initially a small scale producer, having a second project over in Guyana, but really looking at this as a platform to do more and more of these things over time in a relatively expedited fashion. So the way that we kind of describe what our company is about is on these four pillars. So we wouldn't be able to do what we're doing without the team that we've assembled over the course of decades now. So I'm the CEO of the company. Our COO is Jesse Munoz. He and his family used to own and operate a full-service engineering, procurement, and construction management firm. They've built dozens of mines in the Americas over the course of the last 20 to 30 years. And we onboarded all of their technical talent to be our main management team, not only to go and source transactions, not only to go and build mines like we have in Nicaragua, not only to go and permit and develop assets like we have in Guyana, but also to be able to go and insert that operating team on more and more projects over time, and some of which are actually quite advanced stage discussions as we speak right now. Now, secondly, we actually have a highly profitable mine over in Nicaragua. It's always been a little bit of a head scratcher in terms of what it is. This is the highest grade open pit mine in the world, which is kind of an interesting tagline to have on it, but it always kind of made people's minds a little bit weirded out in terms of what we're doing in Nicaragua, because it is a tough ore body. It's a tough one to model. There's definitely a lot of complexities, both geologically and metallurgically with the mine that we have over in Nicaragua. But that being said, for what it is, which is essentially a low 40,000 ounce a year producer, generates a lot of cash. And the ability to have a mining company that has the ability to use cash and develop on next projects, whether it's in Guyana or even some of the other things that we're looking at right now, is a huge asset to have for a junior mining company such as ourselves. This is one of the reasons why there is this dislocation in the market, where you have development stage companies that haven't really participated in the rally that we have in gold. It's because there really is a dearth of cash availability to it. So when you have an operating mine and the ability to redeploy that cash in high return projects, it's a very important asset to have. And then the other aspect of Mako is that we do have a controlling shareholder, Wexford Capital. They were a godsend to the company over the course of the last, both between Mako and its predecessors, over the course of the last 10 to 15 years when we first established the predecessor company for what this is. This is a deep-pocketed investor, a very smart investor in the natural resources space. And we used to get a lot of criticism about Mako and having Wexford in the background, is that whenever we dealt with institutional investors, they were saying, well, how can we invest in you when there's a controlling shareholder over here? On the retail side of thing, there was always a similar question, is that how can we invest in you knowing that there's going to be this controlling shareholder in the background? And then what we've demonstrated really, especially over the course of the last 5 years, is that having the ability to access that type of capital, irrespective of what the marketplace was doing on the outside, was a humongous asset for a company of our size and scope over at Mako to have. We wouldn't have been able to build San Albino in the first place without that. So now, one of the things that the industry has a little bit changed at least in their thought process over the last few years, is that having a financial sponsor is now thought of as an unequivocally good thing, right? So this is definitely something that I had to take a lot of time to explain to investors, that no, having a controlling shareholder with access to capital is good. I mean, it seemed obvious to myself and certainly people that were familiar with what was going on the ground, but it really was a challenge to convince people that it actually was an asset of the company. Now I don't actually have to do much convincing on that. I think now that you have, at least in the context of Mako's life cycle, these 5 or 6 years that we've been involved in this company in this capacity and under the control of our management team at this point, I think people kind of recognize just what a invaluable asset it is to have an investor like Wexford in the background, and it's going to be more and more valuable the more and more transactions we do. So when we're talking about redeploying capital, whether it's going to be in Guyana or some of the acquisitions that we're looking at right now, look, at the end of the day, we kind of know what we're doing on the M&A side. When I first started to hint to the market that we were looking at M&A prior to the announcement of the Gold Source transaction, we always got a little step back from investors, like, whoa, I didn't sign up for an M&A strategy over here. Shouldn't you be focused on what you have over in Nicaragua? And my approach to that is we don't do dilutive transactions. That's kind of our DNA. That's kind of how we've looked at things really throughout our investment career, both myself as well as Wexford. So we are very disciplined in terms of what we're going to be looking at doing. So the only way that we're going to be redeploying capital in the space is to make it accretive for Mako. So Gold Source was certainly a special case transaction in terms of what we bought, both asset quality and management quality associated with that. So even though there was a lot of people that were kind of scratching their heads about whether we were going to be able to pull off an accretive transaction, I've gotten criticisms for a lot of things that we've done over the years. I haven't heard a criticism at all about the Gold Source transaction that was a bad deal for Mako from a financial perspective, even though our most deepest and most critical critics out there in the market said, "Oh, these Mako guys, they actually did something smart." So when we're going to be looking at trying to redeploy our capital, whether it's going to be in developing the second mine over in Guyana or potentially looking at acquiring other things, I think investors can take a little bit of a moment of comfort knowing that we're not going to be doing stupid things, right? So if nothing accretive is available, we're disciplined enough to focus on what we have. We did that over at Mako for years and years, and we're happy to deal with the asset base that we have right now if no opportunity sets are available externally. That being said, I've never seen this many opportunities in my career, so I think there should be a high level of expectation that we're going to be finding other highly accretive transactions in this dislocated market. Now, even though we come from a private equity background and we're kind of looking at the world of deploying our capital into things that are going to be generating high returns on our capital, everybody has a healthy respect for geology and really the reason why we're involved in these assets in the first place. We're not looking at investing in these small mines because they're small and we have these little cash boxes that we're able to extract and dividend them out to shareholders. Like private equity companies tend to be structured like. We actually have a very healthy respect for what Mother Earth gives to these deposits. So we're going to be looking at things that are relatively small scale to get up and running. So we don't actually have to have huge capital commitments, but everything that we invest in is really going to be looking at things to try to tap untapped geological potential. So the ability to get involved with relatively small scale mines and then redeploy that capital in the ground to go and make them bigger and more profitable and better. And you can see the approach that we took over in Nicaragua, which is to redeploy the capital of our primary San Albino mine in the exploration program right now. To date, since inception, through the cash flows from the mines, we've redeployed over US $35 million of exploration in high return levels of exploration in terms of what we've been finding on the ground. We're going to be redeploying that capital to super high level returns like we have over at Eagle Mountain in Guyana. And likewise, we'll be redeploying that capital for other types of assets that also have the ability to grow even beyond the four corners of what we're looking at for the individual initial projects and scales that we're going to be developing when we first acquire these things. So a little bit about our stock price and the opportunity set that we see in the market. I want to highlight a few things. We started discussions with Gold Source in March of 2022. So that was right before that you saw the stock take a big hit going down. And so I get a lot of commentary from our shareholders is that, whoa, do you actually want to look at M&A and opportunity sets if your stock is relatively weak? We never stopped those discussions with Gold Source. In fact, even if you look at that chart right now, when we were talking to them about transactions going as far back as the early part of 2022 and putting pencil on paper in terms of what we were looking at from an acquisition opportunity set, the ratios of the companies didn't really change all that much. So again, we're not looking at really exploiting our particular stock just because of where it is. We're looking at our stock as a currency to be able to acquire something accretive. So there's really two sides of that equation. There's both where we're trading, there's where we can actually access capital, and there's what we can acquire for. And if we're going to be trading relatively strong to other people, that opportunity set is actually going to increase even when you have drawdowns like we had in between 2022 and 2023. Now that we've recovered somewhat with a better market, and there's a lot of companies that have been left by the wayside for whatever reason, And we do think that we actually have an opportunity set right now to use our much more liquid currency than we had even from as late as a year ago, to go and acquire companies in as accretive or potentially even more accretive fashion than what we experienced over in Gold Source. So I always say, like, look, proof is in the pudding. Even though I was talking about an M&A strategy over at Mako going back like the full 5 years of years, this should not have been a surprise to anybody. But there was a lot of people that were somewhat skeptical about our ability to pull something like that off. And now, like I said, I don't think there's any critic out there that actually thought what we did with Gold Source was not good for the long-term value creation over at Mako. So I mentioned a little bit about our team. Our Jesse and his family with the EPCM firm. Frank has been involved with the company also, and its predecessors going back, depending on how you count, nearly 15 years himself. So these are operators and geologists that really like being in the field, like trying to find new things, like being part of an entrepreneurial environment. At the end of the day, we're a company that one of our biggest assets also is being relatively small and nimble, and the ability to change and being able to react to different opportunity sets that are available to the market. And we right now have a good culture that's, again, taken decades to develop, that understands how to run a business this flexible, and the ability to be nimble in an environment where opportunities are starting to come across our desk at a much higher level of frequency than they did before. And then our board, if people are not aware, I think is actually an extremely high-class board. So Gold Source's executive chairman, we asked to come on board as a non-executive chairman, Eric Fear. For those that know Eric and his background, he's now sold 2 companies that started from a relatively small project that turned into a mid-size mine. The first one was Silvercrest Mines. Actually, Jesse, our COO, did the PCM work to go and develop the original Santa Elena open pit for Eric, which is how the connection was initially made. So that was sold to First Majestic in equity at a point in the market right before the silver market really started to take off. And his investors got shares for that transaction, and First Majestic stock went hyperbolic almost immediately after that transaction was consummated. So if you held on to those shares, it was an extremely lucrative exit for shareholders. And in addition to the First Majestic stock, there was also a spin-off company called Silvercrest Metals, which investors were entitled to. And again, that started from a relatively small exploration stage asset, a few tens of miles away from the Santa Elena mine. And that started from scratch, got up and running, super high grade. And then lo and behold, look what happens. Coeur d'Alene or Core Mining goes and takes them out. And hopefully we're going to have another hyperbolic move in some of these more liquid silver names as well. So it is unusual for individuals to develop one company that turns into a mine, and then one company that turns into a mine and is actually sold in an extremely lucrative fashion to shareholders. Eric's now done that twice in a row. So you are looking in very rarefied air when it comes to people with this kind of track record and this level of success. And we do want some of that success to trickle down, if you will, to the Mako side of things. So you can see some of the achievements that we've made over the years. I'll highlight some of the exploration results that we've had. You can see 23 grams over 4.6 meters true width. All of these holes are within 30 or 40 meters from surface. You have 82 grams. Again, this is an open pit mine. 82 grams over 2 meters estimated true width. We're pulling out some pretty extraordinary grade material as we speak. I'll get actually a little bit about our production profile a bit. So we had a weak Q3 this year. The only reason why we actually had a weak operating performance in Q3 was because of a decision that was made back at the end of 2022, right? So we initially started out with our San Albino Mine, which is right by the mill. This was the historical San Albino mine. We got it up and running at the beginning part of 2021. And the second mine that we were going to be developing was called Las Conchitas, situated about 2 kilometers directly south of San Albino. So we spent a couple years drilling that deposit out. And in Nicaragua, it's not a requirement to own the surface rights, but you really do kind of want to have the ownership of the surface rights before you go and apply for your full environmental impact assessment, so the full permits to go and be mining this thing. So right at the time that we were ready to go to complete those acquisitions of that surface rights was the time that the U.S. government instituted some sanctions on the Nicaraguan gold mining industry. So at that point in time, there was a little bit of uncertainty as to how we were going to be advancing. It turns out that it really didn't impact operations at all. A little bit on the governance side of things, but certainly from on the ground operational side of things, there was no impact to those sanctions at the end of 22. But what it did impact is our ability and frankly even desire to really be raising capital for capital investments like surface acquisitions. So we went to the government and asked them for a favor. Is that, would it be possible, instead of acquiring all of the surface rights, which amounted to about US $5.5 million, could we just buy a sliver of surface rights around 6 core areas of the mine, get permitted for a bulk sample in those areas, and when we're back into cash flow, we'll acquire the rest and get our EIA approved later on. The government was amenable to do that. We were able to get our bulk sample permit in June of 2023. It was a couple months behind schedule, so we had a little bit of a weak middle of the year in 2023. And then we were expecting to get the full EIA at the end of 2023. And I don't really think anything would have been impacted with operations at all if we got that permit in April and maybe even in the early part of May. But that permit didn't actually come until the beginning of July. So in Q2, we had blowout numbers, right? So we had the ability to go and mine extremely high grades. We wound up selling 12,500 ounces of gold for the quarter, generating a lot of net income associated with it. But we got behind on some of our pre-strip and development work for Q3, some areas that we actually needed to pre-strip and access. And so that permit came at the beginning of Q3, and then we just kind of hauled butt, if you will, to restart that pre-strip. And then finally, we started to produce the high-grade material in the middle of September. So Q3 was a relatively weak quarter where we wound up selling about 6,500 ounces of gold. We actually only recovered about 5,200 ounces for the quarter. Q4, everything is back to normal. I mean, this really was like a permanent constraint. The head grades to the plant have been running about 7.5 grams. Our recoveries are higher than they've been since we entered into the fresh material of the mine. I always caution people that when they look at Mako, you can't take what we do in a quarter and multiply by 4. There are certain complexities about the ore body, certainly. And then there's also decision processes. At the end of the day, we kind of have a DNA of trying to do the most cost-effective things possible. And we're never going to be in the mood to overspend on our asset in order to smooth out our production profiles to make it more amenable for public market investing, if you will. That's just not the way that we operate. Maybe at one point when we're a bigger company and have like a larger shareholder base, we may turn into that. But as of right now, we tend to look at economic decisions in a pretty rational fashion. So when our Q3 financials come out at the end of November, everybody needs to take that into context. We put out operating results inclusive of how we've done in the beginning part of Q4. But Q4, really, everything is going to be back to normal. But going back to kind of what the cash flow, even from the mine in the first 2 quarters of the year, we're able to generate. I mean, think about this. This is a relatively small mine. At the end of the day, the first 2 quarters of operation, we wound up recovering maybe somewhere in the neighborhood of about 22,000 ounces of gold and generating at much lower gold prices than we're trading at right now. These are not 2770 numbers. Generate $25 million of mine site cash flow, and you can see exactly where the cash was going. Is that we were able to repay $2.1 million of debt. We were able to finance $3 million of expensed exploration. We were able to repurchase $3 million worth of stock. now that the mine is back to normal, I think we're going to have our largest shipment ever scheduled for this afternoon. And hopefully we're going to be getting record high gold prices when we sell that to the market. You can see kind of like the ability to generate cash is not only good for our balance sheet, it's not only good for the ability to return capital to our shareholders, but also is essential for us to go and reinvest in high return projects like we have over at Guyana, but also put ourselves in a very strong position when we're looking at external opportunities, which again, I don't think I've seen as many opportunities as I do right now in my entire career. So what does this mean in the first half of the year when we're talking about gold sold or the amount of gold recovered of roughly 22,000 ounces? Basically means, again, at much lower gold prices, the average realized gold price of only 2,200. So again, that's about $540 lower than what we're trading at as of this second. We were able to generate $24 million of adjusted EBITDA. I mean, the only adjustment that we make effectively to that is to add back our exploration capital, because we do think that that's a core part of our business, is to reinvest in the ground. It's one of our four pillars, if you will, is to be looking at growing our relatively small mines into something bigger. And we were able to generate this 14 million, again, these 2 quarters, $14 million of net income. Remember, this is a mining company where net income is usually thought of as an afterthought. But this is really an extremely profitable, relatively small scale mine. I got a random criticism over the weekend on Twitter saying, well, we don't really generate like a serious amount of income. This is for 2 quarters. So a relatively small mine is able to generate this. It's able to support the entirety of the business. And more importantly, it puts us into a very, very strong position when we're going at redeploying our capital in next stage projects like we have over in Guyana, and then certainly for looking at external opportunities. So a little bit about Guyana. I think the way that the geopolitical landscape around the world has gone is that it's become more and more difficult to develop mines in jurisdictions or like anywhere, and every jurisdiction has its challenges. I get some critiques about developing mines in Nicaragua, for instance, right? And obviously Nicaragua has issues. There are geopolitical components to it, but there's also geopolitical components to investing in areas like the United States or Canada. I think people conflate the ability to build and operate a mine with where they like to live and go on vacation. Those two things are both important in their own way, but they're not the same thing, right? So we are in the business of investing in the development of resources. The resources are located where they are, and you're going to need to have strong political support and community support and stakeholder support to go and advance these things and turn them into mines. And there is a rapidly diminishing amount of countries that you're able to do that in a fairly effective fashion. Nicaragua is one, and Guyana is certainly one. So this is a country that got hit by the proverbial lightning bolt. So they discovered what is essentially a $1 trillion oil find offshore. And one of the things that's a head scratcher for the government of Guyana is that, all right, well, how do we turn ourselves from one of the poorest countries in the world, in the region, to one of the richest ones in the region, without causing a lot of social displacement, unrest? They certainly have a lot of cautionary tales in terms of their nearest neighbors that they have in the north part of South America. And one of their ways of dealing with this is, well, how do we reinvest in other industries that are not associated with hydrocarbon extraction? So farming is certainly one. And then mining is certainly another, because not only is it another industry where Guyana does have a lot of resources developed, but it also happens to be an industry that particularly looks for employment outside the main capital area of Georgetown. So where we are over in the Madia district, this really is an important component of the political framework of Guyana right now, is to go and build other industries in areas outside of the areas that are directly influenced by the Exxon find over at the Stabroek field. So it's a very interesting country to be part of, because you basically have put Nicaragua in the same camp, but for different reasons, is that you actually have a government that's basically telling you, we want you to be there. that is an extremely valuable asset to have, is to have a government say that we want you there, because the list of governments around the world that tell you that are getting smaller and smaller and smaller and smaller. And you really do need to look at where these companies are developing their resources in that context, instead of where these companies are developing resources in where you want to live or go on vacation, because those are two very, very different thought processes and very, very different investment cases in terms of where those dollars are getting spent. So a little bit about the Eagle Mountain development project. Like I said, this was done at an 1850 gold price. This is a relatively new PEA. It was put out in January of this year. So this is a vintage 2024 PEA that was put out and done in a very professional fashion. And look, it's had an NPV of $300 million gold at a sub $100 million capex, something that can pretty easily be funded by our internal capabilities from the cash flow over at San Albino, in addition to our external capabilities of us looking for outside capital that could include more traditional forms of capital like debt, right? So one of the true knocks on Nicaragua is that it's very difficult to access debt capital in a country like Nicaragua. Guyana is not like that at all. So I do think there's going to be relatively conventional opportunities for us to go and advance and capitalize the Eagle Mountain project. And then the obvious point on this is that gold prices are now over $900 higher than when this PEA came out. So this influences two things. One, obviously, it's the direct bottom line. So every single ounce that you're going to be selling is going to be sold at $900 an ounce of a higher price. But also that PEA, like I said, this was an all category 1.8 million ounce resource. That PEA was intentionally designed to only capture the amount of ounces that allowed for a relatively limited amount of upfront capital to access. So the overall pit shell that was made, even though the full 1.8 million ounces was pit constrained, the actual PEA was only situated around 1.2 of that, not for NPV calculation economic reasons. It was designed there to show a scalable project that was optimized for a high IRR, so a relatively small upfront capital that eventually can grow in size. So the change in gold price is not going to only change the underlying valuation of the project just because you're selling gold at higher prices. It's also gonna have to like reevaluate what to do with those additional 600,000 ounces that are there, right? We don't even need to explore to find them, that eventually will get put back into the plan. So the numbers over here, it's not going to be linear in terms of how these are going to move. It's going to be quite a big jump. And when you're talking about a company, again, with like a full operating mine and all the teams and all the assets associated with it, handsome CEO that comes with it as well. But you also have this development project that in and of itself is going to be worth multiples of what our current market cap is trading at this moment. So that's actually one of the reasons why we really like investing in relatively small gold mining companies. It's like, it's always kind of been a head scratcher. Well, why don't you just buy the commodity? Why don't you just buy gold? The reason why you like to invest in this is to capture some of that right tail risk, which comes from higher commodity prices, which comes from more opportunities to go and find things externally. And it also comes for the flexibility in some of these projects that can get bigger just because the economics change so much, but also the ability to really unlock the geological potential for a lot of these assets that are really only sized because they're limited by the drill bit. So we'll always have the ability to reinvest in the ground and get them to grow and to be larger and larger over time. The flow sheet is conventional. The metallurgy is clean. These intrusive ore bodies are known for having like pristine metallurgy. San Albino over Nicaragua is complex when it comes to metallurgy. So we had to spend a lot of time and effort to get our heads around our flow sheet over there and kind of like training our guys. I think everybody is happy where this is nice, simple, clean, get things working without losing too much sleep on dealing with the metallurgical flow sheet over here. So a lot of things that we have over in Guyana are nice because there's a lot of more simplicity. So sometimes we like to beat our chest saying like we were able to really solve some complicated problems. I can tell you, I would rather sleep an extra couple hours a night and not have to worry about our mines because they're running on rails, rather than to deal with a lot of the complicated problems that come with some of these unconventional assets. So that's another very, very attractive attribute about the Eagle Mountain project. And you can kind of see where the cash flows are coming from. Again, at $1,850 gold, you're going to have a production profile in the mid 60,000 ounce a year rate, which is going to be roughly 50% above what our nameplate capacity is over at San Albino. So this was put us well into the neighborhood of 100,000 ounce a year producer, again, with pretty clear line of sight on how we're going to be able to finance this. And then in terms of the strategy around getting this permitted and built, we recently had our prospecting license renewed. We've started the discussions with getting our mineral agreement started over in Guyana, which we expect to happen sometime in early Q2. And then we're starting to do the nuts and bolts work of getting our environmental impact assessment submitted so that we can actually have our mining license negotiated and our EIA submitted likely by Q3 of next year, to hopefully have like a roughly late Q1 2026 approval for the project, so we can start construction on this for first gold pour in the early part of 2027. So even though it might seem like a long time, is like right now we're in the back end of 2027, and you're going to see first cash flow in let's say 2.5 years from now. That being said, in the context of mining, that's actually a very quick period of time. Is that we're able to acquire a company in July. We're able to do all the heavy lifting and getting this thing ready to get permits. We have a supportive government that's willing to do that, and a very, very quick turnaround time, we'll be able to have our second project that's basically there is in another jurisdiction that has oodles and oodles of exploration potential beyond the 1.8 million ounce of resource that you see on the screen. So it just shows you just how quickly we go through this process. So at the end of the day, Gold Source had this really going back all the way since 2010. It did a lot of high quality work. But one of the things that can really be unlocked when you have a platform like Mako coming into this thing is that you have the access to capital. You have, obviously, that's both internally generated through an operating mine and with the external capacities that I mentioned earlier, in terms of being able to have Wexford's pocketbook there, but also our external capabilities of financing these things. The ability to add an operating team that's capable of running projects of this size. I mean, that's the other thing that kind of gets lost in this industry, is that there is a limit to people's capacity to go and develop assets, especially on the smaller scale of things. So, and obviously, Steve Parsons, the president of Mako, the former CEO of Gold Source, extremely competent metallurgist. His background, he knows what he's doing. Obviously, Eric has had tremendous success, the executive chairman of Gold Source. It wasn't like Eric and Steve were going to be building this themselves. It's like you need to develop a team that actually has the operating experience to do that. And one of the things that Mako has, it's that it's not just Jesse, it's really Jesse and his core group of 22 or 23 people that's able to come in, train the local community on what to do, handhold them for a couple of years. And then, like we have in Nicaragua, we now actually have the ability to turn over the keys to a nearly 100% Nicaraguense type workforce. And we're kind of like looking forward to doing the same thing over at Guyana as well, and then moving that same core group of people to project after project until we actually grow Mako into a sizable company. So that's basically our business strategy going forward. I think in junior mining, people are looking at I would say exploration assets that you have discovery, and then hopefully a larger scale mining company are going to be taken over. You have other types of companies that are going to be looking at building their mines and hopefully turn out into something successful. There are very few people that have demonstrated a level of success doing that. Eric happens to be one of those people that have done this more than one time. He's not the only one, so there are definitely some examples of success in this industry, but it's few and far between. And then what we want to do is kind of continually grow our company and kind of understand the attributes of our platform, everything that comes with this, and know that what we bring to the table through the redeployment of the capital that we have from San Albino into Nicaragua and Guyana, and then our platform, the ability to basically unlock some of that value that's been left by the wayside for the dislocated gold and gold equity market, which is ironic when we're talking about all-time high gold prices right now. But it's something that we have the ability to do multiple times over and kind of grow Mako into a pretty sizable company at the end of the day. It's not unprecedented. It's not usual, because that's usually not the outcomes for most companies. But we do think it's the most prudent way of running a business, and certainly in terms of the opportunity sets that are out there, it really is kind of like the most attractive place to be when you're trying to invest in a gold mining company. The ability to have a platform that can unlock some of these potential assets is going to be like a huge value generator when you're able to execute on that. So with that, I'll open the call to questions. Obviously, feel free to ask me anything, and we'll go from there.
All right. Thank you, Akiba. So some questions about Nicaragua to start off with. I think this is referring to Las Conchitas, but can you tell us what's going on with the permits in Nicaragua?
Yeah, so we got the full EIA first week of July, right? So the initial discussion with the government in 2023 had that coming at the end of 2023. At the end of that, really, the 2023 wasn't the government's fault. I mean, think about the schedule. The schedule that we had is that we acquired those surface rights, and every single one is like a bespoke negotiation with the guys that actually own the ground. So what we thought we were going to get started that in the June, July of 2023 kind of got pushed to August 2023. So we're able to acquire those and then have our public consultation. We got a slot scheduled for the beginning of November of 2023. And then the government was on site. And if we really threaded the needle, we could have possibly gotten the EIA, but we were talking about maybe having like a week or two before Christmas break for them to do that. So it didn't happen in 2023, nor did it actually particularly matter for our mine plan, really until April or May. We could have made like some adjustments to what we were doing at the beginning of the year that came out by then, where after May, like ironically, our Q2 numbers were blowout. I mean, this is not a 50,000 ounce a year producer, but we were operating at a 50,000 ounce a year run rate in Q2. I should say it's not a 50,000 ounce a year producer when we're operating at around 600 tons a day. If we do an expansion, it's a different story. But at a 600 ton per day platform, this is not set up to be a 50,000 ounce a year producer. But we were doing that in Q2, principally because we didn't have actually access to do the pre-strip work that we should have done outside the bulk sample permit in that Q2 timeframe. The permit finally came the first couple of days of July, and then Q3 was, you could see it in the operating report that we had. We have this line item that says the phase 2 pre-strip. That's all work that should have been done in Q1 and Q2, and we just needed to haul ass to go and get that waste developed. And then we started to access the high grade part of the mine second, maybe third week of September. So towards the end of the quarter, and then in Q4, everything is back to normal. So right now we have permits for everything within San Albino and Las Conchitas. If we go to a different area like Segoviana, Puerto Rios, El Golfo, that will require a very similar permit going forward, at least from an open pit perspective. Underground is also a different story.
Okay, got it. Thank you. And with the underground mining at San Albino, will that be incremental volume or replacement volume for lower open pit volume?
Yeah, initially, the way that we're going to be scoping out the underground is kind of like in a similar fashion to what we did in 2023 with the bulk sample over at Las Conchitas. So start small, and once we actually learn the technical rules of the game on how we're going to be mining this underground, because there are going to be specific complexities to this because of nothing is easy with San Albino. So we're going to start small. So the main effect of that, and by small, I mean having like a single portal, we'll be able to have maybe about 100 tons of mineralized material, diluted material that's going to be coming out for like a single portal from how we're going to be designing this. the likely scenario is that 100 tons a day will be taking some of the pressure off our depletion, the ability to find more open pit over there. So I think we're going to still operate at 600 tons a day. If it works really well, you can always have a second portal. So now you're talking about 200, you have a third, you have a fourth. So it will take a while to ramp up on the underground before it becomes additive. So I think at least, so to put this in context of when we're starting underground mining, we've had our site visits with the environmental regulators. They're happy with what we're doing. We're going to be finishing off our geotechnical work probably by the middle of Q1 of next year. And then we expect to have a small scale permit on this issued likely by the end of Q2, early Q3 of next year, such that first mineral extraction, because this is a very shallow mine, will likely happen in Q4 of next year. And then over time, we'll develop it, but it's not going to be a decision for at least a couple of years before the underground becomes additive. And then we can make a decision to make expansion cases for our 600 ton per day facility, which in and of itself is 20% higher than what our initial nameplate was at 500 tons per day when we started this in 2019.
Okay, got it. Thank you. And you spoke about M&A. Can you speak to a little bit about like commodity, asset stage, geography, asset type as much as you can in terms of what you're looking at? The audience question here is just specifically about commodity, but any color?
So yeah, we're a gold company. I don't think I would, like, if we had like a really cheap and attractive silver play, great. I don't believe those would exist, but I wouldn't preclude those. So I think so we're a gold mining company, but I think precious metals is probably gold and silver. I don't think we're going to do PGMs or anything like that. And then as it relates to other commodities that may come along with precious metals, I would say I don't think there's any particular reason why we wouldn't invest in a polymetallic mine. With one caveat is that we're set up to deploy capital in relatively limited buckets and amounts, right? So even though we have a very deep-pocketed investor, and while we have like a public platform that has access to some capital, it doesn't really have access to a lot in the context of global mining, right? So you're not going to see Mako underwrite a $500 million to $5 billion check to develop a large-scale mines. So when you're dealing with polymetallic opportunities, they tend to be focused on a little bit more capex, or I guess if you wanted to like draw a distribution of projects around the world, gold tends to populate itself all the way in the left tail, and also there's a lot of big gold mines that populate on the right tail. Will be focused on the left tail. When you're talking about polymetallic mines, they tend to be kind of less of the super small capex and kind of more intermediate to very large scale. So the reason why we tend not to focus on those, so it's not because we're allergic to copper or anything, but it's just like in terms of our capacity, we tend to not focus on that. Oh, and in regions, we're a small group. I wouldn't be able to sleep because I'm a fairly trying to think the best way to describe me, because it's not like detailed oriented it's not the right it's not the right adjective. I like every bit of data at any point in time, and I'm able to actually process that data. It's like that as an engineer, it's like that as an investor, I'm like that as a manager. So if we're operating in multiple time zones, I literally wouldn't be able to sleep ever. Like, so we're not set up to do that. We have a team that's really that's so close knit that we kind of have to be a little bit hands on. That's going to be extremely unlikely that we'll go out of the Americas in that. That being said, if we ever get to the point where we're going to be taken over by a larger company, I would have no issues of having competent people that know how to manage a global business across multiple time zones, who have shown the capability of doing that, to be part of that organization run by a different team and somebody else. So long term, maybe, but in the current iteration of Mako as it exists right now, we'll be focused on the Americas.
All right. So just a follow-up audience question then, would Mako consider additional expansion in Nicaragua?
Yeah, the lowest hurdle projects for us will always be in areas that we operate, right? So we have operations obviously in Nicaragua. There's complexities about acquiring other stuff in Nicaragua for geopolitical reasons, but from technical reasons, the threshold is lower. Where we obviously have offices in Georgetown and in other parts of Guyana, so that will be a relatively low hurdle for us to look at as well. And then our key technical team is in Tucson, Arizona, right? So doing stuff in the Western United States. I live in New York. I doubt we're going to operate a gold mine in Manhattan, but our main operating team is in Tucson, Arizona. So for us to do something in like Nevada, Arizona, something like that, great. It's certainly within our wheelhouse.
Got it. Thank you. And switching gears to Eagle Mountain a little bit, you mentioned that like the PEA that was done at a way lower gold price and whatnot. Like, is the scope of that PEA likely what we should expect in terms of what you'd actually be looking to develop?
So a little bit about the way that Steve Parsons, our president and former CEO of Gold Source, went about that PEA was identical to how we would go through it. And it wasn't even like because we requested anything, it's just because we actually think in similar fashions, is that he wanted to make this scalable. So how do you actually optimize your project for a relatively small scale startup? And then even though the throughput was roughly similar throughout, you have the ability to extend it to a larger mine life. So I think that approach is entirely accurate, and I don't think we would change that approach if gold was at 1,400, 1,850, or the 2,770 than it is right now. What makes that project particularly scalable is that there's a layer of saprolite material that's very easy to process. That's situated, let's say, 0 to 20 meters from surface, and that's and by easy to process, to put this in context, you're talking about material that doesn't really need to be crushed all that much, so very little energy, and then overall, and actually the recoveries are probably the best in saprolite as well. Very little cyanide utilization. So when you're talking about like processing costs for saprolite, you're talking about something that's going to be $13, $14, $15 a ton thereabouts. To put that in context, what we do over in Nicaragua runs us on a marginal basis somewhere between $60 and $70 a ton for processing. So part of that scale, and then part of that is complexity. And then when you're dealing with the hard rock that's below that, let's say 20-meter threshold, that becomes a little bit more complicated. That you need to crush. You need it's hard, right? The hard rock is hard, so you gotta put some more energy into those mills. You gotta grind it finer, and that requires bigger kit, more costs on the energy side of things. So if you're going to be running everything on the same diesel gensets that we're going to start up this operation on, you're going to be adding $10 a ton minimum additional processing costs for that. Fortunately, the hard rock tends to be about 15 to 20% higher grade than the saprolite, so that gives some net effect. So when you're dealing with the scalability of the project, really one of the biggest optimizations is how do you maximize the amount of saprolite initially to get started up, which is relatively low capex, relatively low opex, and then try to make the decision to expand and try to push that decision as far down the hill as possible. So in the PEA, that was selected as about 4.5 years to make that decision, or at least to start the hard rock mining at 4.5 years. The capital decision would be a couple years earlier than that. And then what we're doing right now is the basic engineering work. I should say basic, but the additional engineering work to really hone in on when that decision point is going to be. So, and that has a lot to do with tailings management. Has a lot to do with a lot of the hydrological work that we're doing right now, the geotechnical work that we're doing right now. And by tailings management, like Nicaragua, it rains a lot. It's like over 3 meters of rain a year, which is more than twice as much rain as Nicaragua gets. And Nicaragua is not a dry place. So what you don't want to do is you don't want to have like saprolite only tailings, and then stack your mixed hard rock and saprolite on top of that. That's like asking for problems that we don't want to have. So we're likely going to have a saprolite only tailings area, and then we're going to have a mixed only area. And a lot of the engineering design points are going to be based on that, as opposed to like direct economics. So that's going to be an answer that we're going to get in the next 4 or 5 months. It could mean that we start saprolite a little bit earlier than 4.5 years. But the general scope of the project on how it was designed, I think, was done in a rational fashion. The fact that gold prices are now higher basically means the threshold to take those 600,000 ounces and put them back into the plan to extend the mine life of it is very much in the works. So the economic hurdle rate of that has now been lowered because of gold prices, and then certainly the opportunity set to find more ounces in the surrounding areas has also increased immeasurably as well, both because of the gold price and because now everybody's talking about Mako being there, actually really seriously developing this project going forward. And then all the areas around us kind of recognize that that's actually a good thing for them to go and advance their projects, either through direct consolidation or through some sort of processing arrangement with us.
Got it. Thank you. And I think you mentioned, would it be the Mako team building Eagle Mountain internally?
Yeah, we did this ourselves. I get it. It's like people are like surprised and unsurprised. Like, yes, we have our own engineering team. We can do this from scratch. There are a few things that we need outside help on. Like, so for instance, we have like a world-class dry stack tailings storage facility in Nicaragua. We won't have something equivalent for a lot of technical reasons over it in Guyana. But for instance, on that, we wanted to have like an outside consultant help on there. So we'll always, I mean, we don't have like pride of authorship over here. The reason why we do this is because we're trying to be as efficient as possible. But yeah, no, if we need help on individual components, we'll certainly seek that out. But no, we have the ability to build and operate these mines just through the teams that we have. So we see this. There's like a narrative in the gold mining space is that, yeah, all right, the CEO has done it before. It's like, look at all that success that he's had. And the reality is that the CEO is basically just hiring a la carte type consultants over here. But the ability to spin a good story to convince investors that really it's putting on a hard hat over there and doing that's fine. For me, I can tell a good story too, but I don't need to basically create a fiction that doesn't exist, because we do have the ability to do this and operate ourselves, and something, especially in this snack bracket, in this type of market cap bit that Mako finds itself in right now, is not a common thing at all to have.
For sure. Oh, that's awesome. And kind of as we start to wrap up, can you give us a rundown of some of the major news items to watch for from Mako over the next few months?
Yeah, so we'll have a steady flow of exploration results coming out of Nicaragua. Guyana is a reason why the Lassonde curve exists, is that we are dead smack into literally the most boring part of Guyana. So if anybody wants like really sexy hydrological information, come at me. I doubt it will be in the form of a press release. But that being said, I do think that there's a high probability that we're not just going to be these two assets in the near future.
Okay. Thank you. And was there anything else that you wanted to mention or go over today that we didn't get a chance to get to?
Yeah, look, I think people should, especially, I would imagine everybody on this call has kind of like been involved in this industry for a while, right? So everybody should kind of celebrate the fact that we're trading at 27.70 now. And then even if investments aren't back to where you bought them, I'm not even talking about Mako, like you haven't bought them before, you kind of have to look at, not everybody has figured this out yet, right? So like nobody likes to talk about gold, especially in North America, right? So we're still at kind of like the early stages of I don't know where the commodity is going to go. I mean, certainly in the early stages of that information flow coming to the actual companies and people involved in the industry. And I think people kind of like develop at one point like a healthy sense of doubt about where things were going, just because nothing was working for a decade plus. Now it's different. Like I made this comment publicly like over a year ago that look, we entered into a gold market and people really need to change their mentality about it. And I think everybody was like asleep at the wheel for a long time. Is one of the reasons why we were able to pick up something like as attractive as Gold Source. And then lo and behold, the Guianan Shield is really developed into one of the more attractive parts around the world. And what I could say is that we've been laser focused on this throughout the cycle. But the one difference between being in a bull market versus a bear market is that even though our ideas are the same, our ability to execute on things are immeasurably different. And so I think one of the things that gets lost with Mako is that you have investors that have this, I call it mine myopia. Like in the case of Mako, is that it's like we've always been like an exploration company. We just happened to have had a mine that self-funded our exploration program, but nobody would focus on the exploration side of things because, all right, we're a producer, you got to look at the producer. Now we're an exploration company with a development project. Everybody still has the myopia around the mine. And now I'm telling everybody, we're a producer that's an exploration company with a development stage project and the ability to add more of these over time. At some point, people are going to have to take those blinders off and recognize that this company is not San Albino. This company is Mako. And when you take those horse blinders off for a little bit, you can kind of see what I've been seeing for years, is that this is a company whose growth potential is somewhat unlimited. And while, like I said, the ideas were there for years, we just didn't have the ability to execute because there's always this gumming up of this. Even though I'm psychologically set to be a bear market investor, there is just a lot of friction when you're dealing with bear markets. And when you're in bull markets, things change. And this is we're a different company now than we were a year ago. Going to be a vastly different company next year than when we were this year. So I think people need to have a little bit of a different frame of reference in what this thing is going to be, what it's going to look like, where it's going to go from an investment perspective over time.
All right, thank you. We have one more audience question, if that's okay. Should we assume the NCIB is off the table indefinitely to keep capital available for Eagle Mountain and other opportunities?
Yeah, look, the NCIB, and I've mentioned this publicly before, was never a capital return policy, right? So we have like an affiliated royalty company, which has a capital return policy, which is return 100+ % of your capital to shareholders. That's an actual policy. At Mako, it wasn't, right? So that being said, it goes back to the friction point. Back in Mako, there were certain things that we wanted to execute on. Like I said, the conversation with Gold Source goes back to the beginning of 2022. But we had shareholders that, for whatever reason, didn't like what we were doing, or were just tired of the stock, kind of like gave up, wanted out, and it made our ability to run the business challenging, right? Because we couldn't execute on things with a share price in terms of where it was. So the NCIB initially was in place to clean that out, right? So it's kind of ironic with the NCIB over there. So in 2023, we had a very similar situation to the permitting situation that we had this year. That bulk sample was about 2 or 3 months late. So we had a pretty weak Q2 and Q3 of 2023 as well, not because of operational issues, but just because the bulk sample came in, like, I don't know, let's call it 3.5 months behind what our original schedule was, which actually kind of influenced when the EIA permit actually came in as well. But that being said, in September, I put out this press release saying, we got the bulk sample. We've been processing, and in June of that year, we've been processing Las Conchitas material since the end of July. The mine is kicking ass right now. And then literally nobody paid attention to it. So then we announced an NCIB. We cleaned out everything. The stock goes through the roof. We report our financials in November of that year, and people look at our financials. Oh, these Q3 numbers, they're pretty low. These Mako guys are clowns. Even though we publicly stated that the mine was generating like a huge amount of cash flow at that time. So when people were like asleep at the switch, it was an opportunity to clean this out, and it allowed us to actually have a more rational discussions, and actually wound up being in our favor with Gold Source. And then likewise, when we were dealing with the M&A, just because like Mako has its as a reputation for whatever reason, I don't think like anything we've done over the years has been irrational. But I knew that some of the top shareholders of Gold Source were going to take one look at the acquisition. They're going to have the preconceived notions on something that they read on Twitter about Mako, and then immediately try to sell the shares of Mako after the announcement of this deal. So we had a preconcerted strategy that if that happened, we were going to be there to basically, with a catcher's mitt, to go and collect those shares to make sure that nothing was going to go wrong with the merger. And lo and behold, that's exactly what happened. The first and fourth largest shareholder of Gold Source decided to blow out their position without even having like a conversation with me. And we basically said, come to mama, come to Mako. Like those shares are ours. And we also picked up some new investors in the process as well. It was never a capital return policy, because as Jason points out on this question, there are capital needs, both in terms of what's going on over in Guyana, and there are capital needs in terms of what potentially we're going to be looking at externally. I would rather have that capital for those purposes than to be buying back our stock right now. That being said, we'll renew our NCIB if for whatever reason there are tactical reasons to do this, because it will help influence our cost of capital and the ability to run our business without dealing with shareholders who are invested in it for contrary reasons to what management has laid out. Then we'll deal with it. It's a useful tool to have, but it's never has been a capital return policy, and only will be a capital return policy when the company has reached a level of maturity, which hopefully the company will reach a level of maturity. I will never reach a level of maturity. I'll always be immature. But the company at some point will reach a level of maturity where capital returns will come more serious.
Got it. Well, thank you so much. I don't see any other questions. If anybody does have any questions we did not get to, please reach out. And with that out of the way, thank you for joining us. Have a great afternoon, everybody. Take care.
All right, great. All right, thanks, Magda.
Bye.